Can crypto still save the world? It's been a nightmare couple months for cryptocurrency investors. They've watched their Bitcoin holdings hemorrhage 70% of their value since the record high of $69,000 back in November. Overall, they've suffered crypto losses totaling more than half 55% of capitalization, or an estimated market loss of $2 trillion. The days when crypto enthusiasts could talk about crypto as if Bitcoin were the new reserve currency, or the digital equivalent of the gold standard, or even a transformation of what it means to invest, are over. Crypto looks more like a classic boom and bust investment, like Dutch tulips, rather than the next best hope for humanity. To be clear, this video is a non-financial investment advice. Just my point of view. I'm not an expert. There is no guarantee of special results, and there is no secret internal source of information. You will have to do your own search and make your own decisions. This data is for reasons of information and entertainment. The crypto boom was driven by systematic policy failures by major central banks. As long as they made bad decisions about monetary supply or failed to take on inflation, cryptocurrencies were going to look like solid investments. As soon as central banks shook off their inertia, crypto values started heading south. Meanwhile, the threat of regulation of the crypto market regulations that might strangle the Bitcoin goose has raised additional uncertainties about where the market is headed and whether it pays to buy low now or run for the hills. Despite the burst bubble since January, cryptocurrencies will be here to stay. They may not save humanity from itself, as some thought, but they remain a valuable speculative instrument, but also a store of value when other investments look uncertain or too volatile to handle. At the same time, Bitcoin and crypto do offer a deeper secret that is important to the rest of humanity. That secret isn't what they do, but how they do it. With distributed ledger technology or blockchain. We can think of blockchain as an enormous spreadsheet that's reproduced thousands of times across a network of computers that regularly updates the spreadsheet and its common database. The growing list of records in the ledger, called blocks, are linked or chained together to all previous blocks of transactions using a cryptographic fingerprint known as a hash. Each transaction is independently verified and confirmed by peer-to-peer computer networks, timestamped, and then added to the distributed ledger. Once recorded, the data cannot be altered and it's only shared with those who are part of the encrypted ledger. High-tech guru George Gilder sums up the future of blockchain this way. Even though Bitcoin may not, after all, represent the potential for a new gold standard, its underlying technology will unbundle the roles of money. What's the answer? As we've mentioned in other columns, crypto companies need to adopt quantum-safe encryption to protect their future. That means either installing post-quantum cryptographic algorithms like the ones being standardized by the National Institute of Standards and Technology, or turning to quantum-based cryptography, which uses quantum random number generators and quantum key distribution to create hack-proof communication links across the ledger. There are even quantum security companies that offer both. Likewise, it would make sense for a government regulatory crypto regime to require installing quantum-safe solutions for the entire industry. Making cryptocurrencies quantum secure could even set the next cryptographic standard for the rest of the financial sector, from banks to equity and credit markets. Either way, the future of blockchain, like the future of crypto, hangs in the balance.